LFR format, those things which branch auditor feels that are very important from the point of view of the branch functioning, he should certainly use that other para for the purpose of reporting in the LFR, which was there earlier also and which has been continued in the current LFR format also. So approach of the LFR has been already discussed by Niranjan Joshi, how to plan it. We have to, whenever we go for an audit, before we go to the audit, we have to study the new format. So whatever questionnaire which we had prepared earlier, it has to be modified because there is a lot of new information which is required to be obtained from the branch in advance, because LFR compilation takes a lot of time. So it is always better to study the format and whatever information you require. So before you start an audit, you get the information in advance. So filling up the LFR will be more convenient and faster for the purpose of our audit. So that information you should ask in advance. And since LFR related work is of a major voluminous work, you have to continue this work. So you should assign this job to a senior audit team member, and he will do the LFR compilation along with the main audit. So it should not be taken up after the main audit is over. It is advisable that we start the LFR work along with the regular branch audit. And Niranjan has already discussed about how should we give the comments. There should not be any vague or general comments. Fortunately, I have had an opportunity to, for the last 10 years, I have been being a central statutory auditor, so I have got an opportunity to go through the various LFR, because as a part of consultation process, we have to go through the branch LFRs obtained from the branch auditors. So most of the cases, like Niranjan had also said that 80% of the cases, I'm not actually criticizing the CAs or the auditors, but 80% of the LFR were answered yes, no, not applicable. So that is not expected from the branch auditors, but we actually wish to have a critical, specific comments of the branch auditors on the function of the branch. Yes, no, not applicable doesn't give the actually correct picture about the branch. So when this new LFR has come into picture, now it is asking for very specific answers. So you will not be able to answer for many questions in the style yes, no, not applicable. So it will require you to report the specific comments. So when we go through the LFR, you will also understand. So do not copy from the previous year, because this year, last year it was okay, but if you copy the format from the last year to previous year, there is possibility that some of the contents related to last year, previous year might get repeated accidentally in the current year. So it is not advisable to use the last year's format or copy paste it from the last year. So it is always better that you compile the information afresh whenever you do the audit. And again, it is also, I would like to again reiterate that your main audit report, LFR, or they are both different. So whatever qualifications you have to give, or whatever, if you find anything in the LFR comment which warrants a classification or qualification, then it is not enough that you give it in the LFR. LFR, that qualification or that comment, whether it is causing you to give a modified opinion, or whether you want to give it as an emphasis of matter, it is your judgment as an auditor, but that should be specifically given in the main audit report, because these are the two separate reports. Now, when all your reports come to the consolidation zonal office or head office or regional office, what is done is everything is removed apart. So all the returns, there are about 53 returns which are there, balance sheet, P&L account, LFR. So everything is separated. So it doesn't remain intact. So it is not possible for cross-referencing. So whatever comments you have given in one report, you should not give a cross-link. You should actually repeat it, because everything gets separated when it is our reports or the branch reports go to the regional office or zonal office for the purpose of consolidation at the head office. So you should discuss your findings with the branch manager, branch management. Wherever you are giving the facts should be correctly reported in your LFAR, like for example, if there is a reporting on fraud or anything. So whatever you have to report related to facts should be the actual facts available on the reports. You may have a different opinion. If your opinion is different from the branch head opinion, then it is better to also give the branch head's opinion in the report. So wherever there is a difference in opinion on any matter of reporting in the LFR, then it is always better to also have a bank's opinion or branch manager's opinion incorporated. So it is easier for the management sitting at the head office level to actually have a broader view of the report. So he also understands the bank's point of view. So again, we have discussed about the specific disclosures and what is the limitation. If there are any certain things which you didn't get the information from the branch, that in that case, you should give a specific disclaimer in that particular para that information related to this aspect of reporting has not been given by the branch. So you should be very specific wherever such records were not made available to you, because in future, if there is any issue in that, you will be protected by your report. So that also thing you should keep in mind. Now I'll go to the clause by clause analysis. So wherever what I've done effort to just wherever there is a change, I've said new, and old means the old para which is continued. So we go to the LFA format as such. First part is assets, then liabilities, deposits, general, and miscellaneous. So these are the 4 or 5 sections of LFR format which we have to follow, or that is specific format in which you have to report. So about the cash, you are aware about the joint custody, that the cash has to be kept under joint custody of the cashier, head cashier. If there are multiple cashiers, and either the accountant or the branch manager, depending upon the size of the bank. So how do you see effective joint custody means whenever we go for an audit, we have to, and we verify the cash, we have to actually see whether when they are opening the cash safe, the keys which are being operated are operated by these two differently. It's not that cashier will take the key from the manager and he will apply both the keys and opens the cash safe. So that by observation you can observe and give your opinion about that. Now about what is the change in clause B? Now ATM transactions were not there previously. Now ATM transactions have been covered under this new format. We have to also not only to verify the cash balance at the branch, but also to verify the ATM cash balance. So ATM cash balance has to be verified whenever our team goes to the branch. How will you verify the ATM cash balance? You are aware that whenever the ATM is open, then it goes on the maintenance mode. There is a journal voucher which gives the total track or the audit trail or the record of the transactions of the ATM. So that journal roll printout has to be taken. It will give you an idea about the number of notes which the ATM has. So there will be different cabinets in that, and in each cabinet 500, 100, and like notes will be there. And those notes we have to count, and we have to count. It will not be in the terms of total amount of rupees. It will be in the terms of number of notes per packet. So we have to verify the packets, verify the notes, and tally the balance with because ATM cash balance will be reflected in the physical format, will be reflected on the journal roll. That is one thing. You have to verify it with the GL code. So verification of ATM cash can be done first with the journal roll, and then with the journal ledger head of that particular ATM in the branch books. So that way you have to match the cash. And then this is about the regarding the maintenance of cash balance above the limit which is allotted to the branch, just to not the branch should not keep excess cash balance to have a better funds management. So we have to that you can take from the cash balance ledger or from the cash docket for how many days the cash has exceeded the limit. So you can give the number of instances. You should not be not expected to give the day on how much date, how much cash balance was exceeded. So even if you give the number of days it has exceeded the limit, it is enough for you. It is enough for the branch. And plus, if you want to give, if it is exceeding for more occasions, then you can give the average cash balance. So let us suppose if the cash retention limit of the branch is 15 lakhs and the average cash balance is 25 lakhs. So that is a major variation. So you can give by way of average cash balance held by the bank during the year which you are auditing. Similarly, we have discussed about how the bank cash balance is tallied in the ATM. So whenever we go for an audit, apart from only thing, one thing you have to remember: if the ATMs are being managed by the outsourced agency, that ATM cannot be opened without presence of that particular officer of that agency. So whenever, if you are doing the audit and whenever any cash is being replenished in the ATM, at that time you can verify the ATM cash balance physically. Then again, insurance cover, you are aware that you are also aware of that cash insurance is taken, blanket insurance policy is taken by the head office, and the limits are allocated, cash in transit limit as well as cash held at the branch. Both the limits have been fixed by the head office per branch, and head office takes out a blanket insurance policy. So what we have to verify is a letter or confirmation from the head office that for your branch or for the branch you are auditing, the limit is so and so, in transit is so and so. So that verification of letter or confirmation would be enough for the purpose of our reporting. Normally, this cash insurance will be to the extent of the cash retention limit. So cash retention limit and cash insurance limit should ideally match. So now we'll go to the next slide. Okay, now we go to the next slide, which talks about the assets, balances held with other banks, RBI and other things. Now, the new format has said it is applicable for branches with treasury operations. Now, what is treasury operations? Treasury operations means those branches of the bank who are currency chase branches. Means they are the agents of RBI. So that particular branch which we are auditing, if it is a currency chase branch, then it will be treated, the cash balance held at that branch will be treated as balance with RBI. So basically, this clause will be applicable for only those branches which are currency chase branches. So which are having a treasury operations. But there is one point, I think when the guidance note actually comes, that point will be more clear. There may be certain branches where now you are also aware that now there is a CTS for clearing operations. So there is the image of the check is transmitted electronically by way of encrypted documents, scanned document, and through exchange of these mails and the information, the clearing is settled. But in case of rural branches or interior branches where CTS facility is not available, then there may be a clearing agent bank and where the branch will have to open the account in that particular bank. Suppose you are auditing Bank of Baroda and SBI is the clearing agent. So that particular branch of Bank of Baroda will have to open an account with SBI. So wherever there are certain accounts of the bank, branch which opens the account with another bank, so there that question may arise about the reconciliation of balances, where the confirmation is available or not. But if this particular clause is applicable for only currency chase branches, then in that case, I think you need not cover those aspects. So you can straight away say not applicable and move it, because those accounts are not covered. Those aspects are not covered in the current format. So what it says that this clause will be applicable for only treasury operations. Go to the next. So where the branch maintains an account with RBI. Now this is about how these currency chase branches function. What is how they do. So wherever each currency chase branch will be covering a cluster of branches around it, maybe 25 branches, 30 branches, depending upon the size of the bank and the number of branches. So what is the duty of that currency chase branch? Whenever any cash balance is required, cash shortage is there for any particular branch of that particular bank, then currency chase will give that. Wherever there is a excess cash held by the particular branch, then that cash will be deposited. So it is a cash management branch which is managing the cash position of that particular cluster. So you will have to verify the operations between the reconciliation between of cash in transit, cash deposited. So as of 31st March, ideally, all the banks have been instructed that there should not be anything in transit. So the confirmations about cash balance as of 31st March held by that currency chase branch, you should see the whatever the branches it is like covering. You should have the confirmations about the how much. There should not be anything in transit. It should match. And secondly, that particular branch will be, let us suppose we are doing a Maharashtra state. In that Maharashtra state, there are, in case of Bank of Baroda, there are 5 to 6 branches which are handling currency just operations. There will be one link branch for the state as a whole. So these 5 branches of this particular bank, Bank of Baroda, they will confirm the balance of 31st March to that particular link branch, and that link branch will confirm that balance on behalf of these 5 branches of the Maharashtra state to RBI. So the total balance of this all link branches to RBI will be the balance of that particular bank held with RBI. So as a branch auditor, your duty is to verify whether that particular branch cash balance, there are no reconciliation items and it is matching. And it is being properly reported to the link office. So that is the thing which you have to verify. And if there is any other matter which you want to give, then you can give this in this clause C. You can give your comments under this clause. If you observe any that if the cash in transit is not being done properly, there are some security issues related to the cash when it is transferred from currency chest to the from branch to currency chest or currency chest to branch. If the security arrangements are not proper, then that particular information you can give under clause C of this particular clause. Now, money at call and short notice. This is again, I don't know why this clause has been maintained in LFR, because this should not be applicable, because whatever funds the branches have got, only the head office or the treasury department of the bank. There are 2 types of treasuries. One is domestic treasury and forex treasury. So domestic treasury is handling all the investments on behalf of the bank. So normally the treasury would do that, but I don't know why this particular I'm not aware about any nationalized bank which is actually the branches are having power to invest the money or on its own. So this particular para talks about the money at call and short notice. So if the surplus funds of that particular branch are kept with or invested by that particular branch, and then there is an income on that. So money at call and short notice, if it is there, then only you have to report. Then otherwise we need not report. This may be applicable to those branches which you are auditing, for which the head office is of that particular bank is abroad. So foreign banks are operating their branches in India, you may find this money at call and short notice, because those branches might be allowed to invest their funds in India. So in that case, what you have to verify, has the branch kept money at call and short notice during the year? That is number 1, yes or no. Has the year-end balance has been duly confirmed and reconciled? So wherever these investments are being held, we have to obtain the confirmations from the like where the funds are invested, and those are reconciled as at the year end. And third, next thing which you need to verify, whether the income or the interest on such investments has been properly recovered by that particular branch and it is recorded in the books of that particular branch. So these are the things which you need to verify. Wherever there are where the branches are authorized to invest the funds at call and short notice, which normally 99% cases will not be applicable during for the purpose of our audit. Similarly, there is one this particular clause of LFR assets investments. It had 2 clauses for branches in India, for branches outside India. Again, considering that branches are not allowed to do any investments, because domestic treasury only would do that. So that clause is fully removed, and now this clause is there only for investments for branches outside India. So this particular clause, again, what we need to verify in that, has the branch, so when the branch is making the investments, that particular office or the branch manager will be allowed to do the investments based on his powers, delegated powers. So we have to verify whether the investments of purchase or sale which have been made by that particular branch have been made within the delegated powers of that manager. Secondly, then you have to verify whether the securities, mostly those will be in the form of demat formats, then you need not verify. But if the investments are made where there is like investment in local bonds of the local corporations and other things physically available, then you have to verify those investments physically, and then you have to give the certificate to the center statutory auditor or the head office regarding the verification of such securities. So those are that is applicable only for the investments which are made by the branches outside India. Now, okay, mode of valuation. So again, valuation also will be made by that particular branch. We have to see whether those investments have been valued as per the RBI circulars. If that particular branch is also guided by that some many foreign banks law, then you have to see whichever is stringent valuation norms, whichever are more stricter, those will be applicable, and that you have to verify. So if you are auditing any branch outside India, and then you have to also be aware about the valuation norms of that particular country, of that particular area, a particular country for which you have to do the auditing. The RBI guidelines says that whichever are stringent, those only will be applicable for the particular valuation. This is about the old or matured overdue fixed investment. So wherever you find any overdue investment, then you have to see whether those have been encashed, or if it are not encashed, then whether you have to see the correspondence with whether the particular branch has made the correspondence with the company or with the investor to get the money back. So these are the things which are there old LFR have been continuing. Now I go to advances, which is very important. I will spend some more time in that. So these are the changes which have been marked in yellow are very, very important. So previously the limit was 5%. Now it is raised to 10%. Previously it was only applicable for the fund-based advances. This is very important because you have to understand uh, what is the criteria of verification of advances. Now there is a threshold limit in which RBI expects the branch auditors to do the transaction audit. So we have to do the full detailed audit of those accounts. So those have been defined, which we have to do. And for other advances accounts, we have to define a sample. Niranjan Joshi has already given you how the sampling can be done. Then you also got different institutes guidelines about the sampling techniques which you can use. But for those advances for which you need to verify 100%, the criteria is very specific. It says that 10% of the outstanding aggregate balance of the fund-based and non-fund-based. Previously, it was only fund-based. Now, non-fund-based has been added. That means whenever you go for an audit, not only you have to see the outstandings in the fund-based, suppose there is an account which is having a fund-based facility of rupees, let us say 5 crores, and non-fund-based facilities of say 10 crores. So, as of 31st March 2021, whenever we ask for the information from the bank, we should add a column that what is the information, what are the sanction limits, fund-based, cash credit, term loan, then non-fund basis, LC, BG, other things. So you have to take the sanction limits and outstandings. So aggregate balance, which is outstanding, that you have to consider, including non-fund based balance. So let us suppose that particular XYZ account is having a fund-based limit of 5 crores, outstanding 5 crores. Now non-fund based limit, LC limit, sanction limit is at 10 crores, outstanding is 7 crores. So 7 plus 5, 12 crores is the outstanding. Though the outstanding fund based is only 5 crores, and assuming that particular branch is more than 100 crores, so only those accounts more than 10 crores will have to be reported. Then in that case, even if the fund based outstanding is less than 5 crores, still you have to take the aggregate of fund based and non-fund based and include that account for the purpose of your audit. So this particular format talks about the fund-based and non-fund based outstanding. So not only not the sanction limit, but the outstanding as of the year end. Now 10% at 10 crores means for those branches, if there are 100 crores is the outstanding as of 31st March, including non-fund based, then all accounts more than 10 crores will come into that. But if it is less than 100 crores, so let's say 70 crores, then in that case it will be 7 crores. So which is the less. So you have to see the accounts where the outstanding fund plus non-fund based balance outstanding is 7 crores and above. If it is 70 crores. So it will depend upon year-end position, aggregate advances position, but whenever you take the aggregate advance position, you will not take the balance sheet figure, because the balance sheet figure in the general ledger, it will only give you the fund-based position. So apart from that, you have to have information of non-fund based limits, LC or BG, which have been availed by the borrowers as of 31st March. So those limits or those accounts or those amounts will have to be considered by us for the purpose of this LFR particular clause, for the purpose of audit and for purpose reporting. We come to that in the second thing. So this particular care, this was not there in the earlier LFR format. It talks about the what we have to do for the purpose of threshold. So these are the amounts, threshold accounts. We have to do the transaction audit of the account, specific details, and others we have to do the sample audit. So this we have to keep in mind. And the critical comments will be based on the review of the above, and other test checks should be given in the respective paragraphs in the new format. So this format is again there. Here you have to give the account numbers, account name, then again fund based. So whenever you go for audit, I will request you to take the information in this format. So all the advances account, you have to add one more column, because up to now we were taking the balance of only fund based limits at the 31st March 20. Now from 21 onwards, we have to add one column balance as at year end non-fund based. So all your LC and bank guarantee to the extent availed. So let us suppose the non-fund based limit, LC limit is 10 crores, BG limit sanction is 5 crores, 15 crores, but utilization is only out of 15, only say 3 crores. Then you will be taking 3 crores, not 15 crores, because we have to consider how much LC facility or the BG facility, whether BG is a financial or whether it is a performance guarantee, all both together, and LC whether it is discounted or whether it is LC for any for LC, all types of LCs are covered. So actually, whichever facility is utilized by the borrower only will be considered for the purpose of your data. Now it talks about what is total outstanding at the branch. Your total outstanding of the branch fund based should match with the GL or the balance sheet of the particular branch, and your non-fund based balance total outstanding limit should also match with the BG plus LC figure. So whenever you are reporting in the LFR, you have to do the cross tallying of the aggregate balances at the year end, fund based plus non-fund based. So one area of check is your balance sheet, where non-fund balance, your BG, you have to aggregate BG plus LC, and total of that, though it will appear as a contra item, but it has to match with this figure, which Y figure in this particular thing. So X and Y, we have to match with the GL, and also with the capital adequacy statement, which will be certifying, that also will have information about the fund based and non-fund based limits. And last line or the last row of this particular LFR format says that how much percentage of advances we have verified, examined. You are aware that whenever you see the audit report of the bank as a whole, so top 20 branches are audited by the central statutory auditors, and all balance branches are being audited by the branch auditors. We have to report how much business of the bank has been covered. So this particular information will be available, readily available for the after consolidation. How many accounts and what percentage of the fund-based business of the particular bank as a whole has been covered by the auditors, including statutory auditors plus concurrent auditors, because those branches which have not been done by statutory auditors will be done by the concurrent auditors. So total extent of check that has to be reported in the main audit report of the bank, so that figures will be readily available whenever this format is being reported by the auditors. Now, credit appraisal, the format is same for first clause about the compliance of the procedures. Only thing, one line is added. What is in your opinion, whether shortcomings? So previously you can give yes or no, but now we are asking your opinion. So you have to specifically give the opinion whether what level, or are you satisfied with the credit appraisal aspect of the advances? So here LFR is specifically asking not yes and no, but your opinion. It is satisfactory, not satisfactory. Whenever we are saying it is not satisfactory, then you have to give the reasons. You have to give the accounts wherever you have any shortcomings to be reported. So this particular clause, there's only one change. It is asking your opinion on that. And then second clause is again new. It is asking you the information about the quick.
Prashant sir.
Yes.
I have just one query.
Yeah, can
I raise, or can I tell now, or at that only in question hour session?
What is? I will.
In earlier slide you have showed that in columnar one more column is required to be added, where the fund based and non-fund based limit is required to be considered. Whether this both the columns will be available from the branch, because the branch is very reluctant to provide the information.
Banks will have to what we have to do is, in advance, you have to call for this information, this format of LFAR, because this may take a lot of time for compilation. So it is always better to ask as a part of your MR to take the information in advance from the branch, and that you have to match with the bank's balance sheet. But that will be
Correct.
available only after 31st March, because as of 31st March only your figures will be freezed.
Correct. Because
So
unless we get this information, we will not be able to get the percentage with the non-fund based limits.
correct. So that those figures will be only available after the year end. And
But
till you report. So
this report is generated from the system.
actually yes, but actually I'm not aware about non-fund based limits. You have to have a separate report. They have to
Then
combine these two reports. They will be made available the report of only fund based limit.
correct. That is what I
Non-fund
wanted to ask.
non-fund based limits will have to be plotted by the branch.
Then
given to us.
that
Because
information is required to be compiled here. Then only combined percentage
correct.
we can draw.
So for this purpose, what I recommend is you ask this information from the branch in advance. After, say, if you are starting the audit, say on 5th or 6th April, before you start the audit, because this may take some time. If the branch is because you will not understand what is the threshold to be checked.
Correct.
So for that purpose, which accounts we need to do a 100% transactional audit. So for identification of that particular those accounts, we need this information in advance, and based on that, we can also instruct the branches to give the accounts which are falling under this. We'll verify that, but the branch also will be able to give you what are the accounts which are covered, because there is a separate format of reporting. You're aware that there is a 22 like there is a separate annexure is there for large advances for more than 2 crores. You're aware about that. So same format will be used for this particular account. So they have to compile the information. Branches will have to compile the information. So they should have the information ready in advance for the purpose of branch auditors, and then you have to just see whether all these accounts have been covered or not. So that verification is the duty of the branch auditor.
And this format is changed in this LFR new clause A.
This is the particular. What I'm presenting before you is the format. I have not made any changes. This is the
correct. Then the branch is required to provide this information.
I think so. They will have to give, because they have to give you the information. They have to give the details.
This is the first year. They will also
yes.
They are also not aware of this thing, how to generate it.
Correct.
In advance, we have to ask them to provide this.
The challenge is of adding a column of non-fund based limits outstanding. So again, we have to not take the limits, but you have to take the actually limits used by them. So that is also very important.
Used by then not the sanctioned amount. Utilized amount is they have to give.
Correct. Yeah.
Yes, sir. Okay. Thank you, sir.
Yeah, well. Now I go to the quick mortality accounts. So whenever we go for an audit, we should ask for one more information, one more report which you can present, because if those accounts which have become NPA during the year 2021. So the dates of NPA of those accounts, if it is less than 12 months, so account sanctioned in the month of April becomes NPA in the month of March. So such type of accounts, there is a suspicion that there may be a fraud in that account, because no account can become NPA within 12 months, within the year. So these accounts are termed as quick mortality accounts. So we have to do a very deep scrutiny of such accounts. So before that, we have to get information of such accounts from the branch, of those accounts which have become NPA within 12 months. So account number, account name, balance at the year end. So specifically, you have to see that these accounts are reported in the revenue. This was not there in the earlier format. Again, this is a new clause. The bank also, or the auditor centers also expect you that you also verify the interest rate which has been paid in the system, because for each borrower, in case of especially large borrower, those accounts which are 10 crores, 7 crores, there is a internal rating system by the bank, and depending upon the risk rate, the risk in that particular number, there is a marking system. So depending upon the marking system, the risk of the account is determined, and depending upon the risk, the interest rates are determined above the MCLR or whatever rate it is. So we have to verify based on the latest sanction or latest review whether those rates have been correctly paid in the system. That you have to verify. Then you have to also verify about the renewals, frequent renewals. There is one circular which is there. I will give you a list of 3-4 circulars which are very important, which have been issued during the year 2021. You will observe that there are any cash credit account or working capital account has to be renewed within a period of 1 year. Due to various reasons, maybe due to the borrower's fault, he is not giving you the information related to his audited balance sheet and other guarantors information, or there is some problem in the account. Then what the bank is doing the short reviews 3 months. 3 months. So they are allowed to do only short review for the maximum of 90 days, 3 months. So they are doing, instead of doing the regular review, they are doing the one back-to-back renewals, which are short renewals. So RBI has came out with a specific circular giving the guidance to the bank that how the renewal process has to be done. So that circular is applicable to you. So if you find any such cases where the regular renewal or review has not been done, you should give your specific comment in this particular paragraph. There is also one clause in NPA that any account which is not renewed for more than 180 days will be treated as NPA. So whenever you verify the renewals, you should ignore short renewals, but also your date should be what was the actual full review done by the branch for that particular account. That will be the base date for the purpose of reporting, not the date of short review. That you have to ignore all short renewal or rollover problems. So that you have to keep in mind. Wherever you find frequent such things being done by the bank, then you have to give by the branch, you have to report it under this clause. Now, credit rating. You are aware that for accounts for more than rupees 5 crores for this, apart from the internal rating, sometimes banks also do the ratings by the external credit rating agencies like CRISIL or there are 4-5 institutions. From those institutions, they get the internal rating done. So what you can do is you should ask for the latest rating particular of that particular borrower, and depending upon the borrower's rating, the interest rate is applicable. You have to keep in mind that credit rating is in force for a period of 12 months plus additional 6 months, so 18 months. So whatever credit rating is available at the branch should not be more than 18 months old. Next thing, if that letter is not available from the agency, then it is possible to get the information on internet. So if you they have done the rating from CRISIL, from CRISIL's portal, you are will be able to identify the rating done by them. So if the information is not available at the branch, you can get it done through internet or the portal of the agency from where the rating has been done. Because depending upon the rating, the interest rate may change. Then we go to the sanctioning and disbursement. About this delegated powers, you are aware, because whenever any advance is being done, we have to verify whether it is within the powers of the branch manager, and that is thing that. So I will not spend much time on that. There is a reporting system of the advances sanctioned by the branch manager within his powers. So we have to see the MIS whether it is being properly handled, properly reported. All the eligible accounts are being reported. No account has been missed. That is coded under A and B. Then you have to also verify. Now you will be verifying only those advances which have been disbursed during the year 2021. Will not be going back to the accounts which have been disbursed in the earlier years. So for those accounts which have been disbursed in the current year, we will verify whether the terms and conditions for which have been sanctioned have been complied with before the amount is being disbursed. That is also old, but still that is continued. Now there is one more clause. You are all aware that the banks, the companies are not allowed, or the banks are not allowed to sanction loans for companies to buy back their shares. So if you find such very rare case, funds loans are given to companies for buyback, then you have to give your specific comment about that particular account. Although very rare. Documentation, all the clauses are old clauses. You have to verify this. Again, this clause is applicable for those loans which have been sanctioned and documented during the current year. So whether all the credit facilities have been released only after the execution of the documents by the borrower, For large borrowers, then there is a legal cell of the bank. We have to see whether the vetting of the documents has been done by that legal cell. Sometimes there are advocates reports are there, so we have to see whether the advocate of the bank has certified that all the documentation is valid and complete. Then only the facilities are released to the borrower. And if at all there are any deficiencies in documentation, like you are all aware that in case of corporate borrowers, they have to register the charge with the ROC. There is also condition about the charges to be registered with the SERSAI in case of involved property. So you will be verifying whether these charges have been created for those particular borrowers. And wherever it has not been done, you have to still give the report for those accounts which have been sanctioned and disbursed during the current year 2021. You are aware about the deposits against lien. So the lien against those deposits against which the loans have been granted have been recorded in the system. So that particular lien has to be marked in the system. So you can on a test check basis tell your assistant for those deposits, advances against loans, whether lien marking has been done or not. These are all old, so I will not spend more time on that. I'll go to the next slide. Now this is about the review and supervision. Now this first paragraph is common. It talks about the how many reviews are pending as of 31st March 21. Now the previous period of this was 6 months, 6 months more than 1 year. Now that has been reduced. You have to, because you have to, whenever you see the format, you have to proceed very carefully. The previous format had the period between 6 to 12 months and more than 12 months. Now it has been reduced from 3 to 6 months and more than 6 months, because if the account is not reviewed for over 6 months, then that account has to be treated as NPA. Even if that particular account is standard in by other, like recovery is there, everything else is perfect, but that account has not been reviewed. So information of those accounts which have been pending regular renewal. Here I have already mentioned that you will be ignoring the short renewals. You will be only taking the full review as the last date which has been done. So here the format has changed to the extent of timing. From between the 3 to 6 months, now it was 6 to 12 months and over 12 months. Now it is 3 to 6 months and more 6 months. Now stock audit, stock book statements and other things, that periodical data, like you're aware that in case of large borrowers, banks, borrowers have to submit the stock statement to the bank. The stock statements, the DP is calculated by the bank, by the branch, and the DP is updated in the system. So that is continued, that you have to verify. In case of large borrower accounts on a test check basis, the extent of checking is already defined in the first paragraph of this particular LFR. So large accounts more than 10 crores, you have to verify for all the months or all the accounts. Then you have to also verify, is the DP properly computed? So this question was not there in the earlier LFR. So not only you have to see whether they are the branch, like advances department, they are doing the scrutiny and other things, but they have to also report whether they are calculating the DP properly or not. So whatever DP has been calculated by the borrower has to be verified by the officer, advances officer, credit officer. He has to do that. He has to recalculate the DP, confirm the DP, and update in the system. So that you have to verify whether that has been done or not. Similarly, we have to also see whether the latest audited financial statements have been submitted for the accounts which have been reviewed and renewed during the year. So for those accounts which have been reviewed during the year 2021, you have to verify whether the review has been done based on the audited financial statements, not based on the tentative statements. So that you have to verify. In case of those accounts which have been reviewed or renewed, not on basis of financial statements or which are audited, they have to give us specific comments about such accounts in this particular paragraph. Now, here I go to the obtaining of stock audit reports. Now, we have to, there's further addition for the branch auditors, because you are all aware that each bank has got a policy of doing the stock audits depending upon the bank's size. Certain banks are having a stock audits of more than 1 crore. The bigger banks are having stock audits of more than 5 crores. So it will depend upon the bank. But whatever the policy of the bank, you have to see whether that policy has been followed. So you have to ask from the branch how many accounts are there at the branch which are covered in the stock audit. Whether stock audit of that particular accounts have been done by the stock auditors, whether the reports of the stock auditors are available on the reports, whether the stock auditors, based on the stock auditors report, the DPs have been updated in the, so wherever the stock auditors have reported shortfall of DP, whether that short DP has been reported or has has been recorded in the bank system or not. So that also we have to verify. And you have to again do the you have to verify whether UDIN has been obtained by the auditor. UDIN certified stock statement has to be there. The stock audit reports have been there. So we will do all the verification. So if you find that stock audit of that particular borrower was ordered, not done, stock audit was ordered but report is not available. So all those accounts wherever stock audit has to be conducted, either the report is not there or report is not received or audit is not conducted, all such accounts we have to be reported under this particular clause. So our responsibility as a branch auditor has increased due to the addition of these new clauses. So it not only just talks about the compliance done by the branch, but also you have to report what is the compliance pending. So then in that case, we need to have a specific information about those accounts for which we have to report. So that is a new addition about the stock audit. So whenever stock audit report is done, whatever comments have been given by the stock auditors, the branch, the credit officer, the branch has to take action on the negative or adverse points. So again, you have to verify whether it has been done or not. Again, previously there was one, I'm talking about point number Roman small 4, advances given to non-corporate entities. The limit was defined as 10 lakh rupees. Now in this particular format, they have removed the limit because now the limit has been increased. The bank, each bank will have, or RBI will determine the limit above which banks will need to have a audited copy. Suppose it is a proprietor, so proprietor is not required to the audit. But if the proprietor is sanctioning the limit of say 25 lakhs, 30 lakhs, 50 lakhs, then if he is not covered in a tax audit, still banks will have to ask for that borrower the audited accounts, financial statements, and based on that audited statements only that proposal can be processed. So we have to give the list of those non-corporate entities with limits beyond which bank has done the bank has sanctioned the limit without the audited accounts. So again, only the limit of 10 lakh has been removed. Other the clause has been retained. Now the column number 5, it talks about, does the branch have on its record a due diligence report in form and manner required by RBI? Now, Reserve Bank of India for consortium accounts as well as multiple banking accounts beyond a limit have told that on an annual basis that particular borrower has to submit a report. That the format of the report has also been given by RBI. Due diligence, it is related to the compliance of ROC, compliance of the statutory dues. All these things are covered under that. So that due diligence report has to be done every year by that particular borrower. Whether in case of a lead bank, we have to see that if you are doing an audit of Bank of Baroda and SBI is a lead bank, then you have to see whether that particular borrower which is covered under that, I think more than 5 crores that is required, bank is having a due diligence report which has to be taken annually. So that report available at the branch should not be more than 1 year old, or maybe 3 months are granted, so 15 months old. So all those accounts, wherever due diligence is required, it is to be certified by either by the company secretary or by the chartered accountant. So both are allowed to do this attest function, but we have to report whether it is there or not. So specifically those accounts for which due diligence report is not available, you have to give. You cannot miss a single account where this compliance is there, because whenever you are doing the audit of a large corporate branch, wherever such accounts are covered, then it is your duty. You have to make a checklist. What are the requirements of such large borrowers, including that external credit rating, due diligence report. So you have to make a checklist, and we have to see whether that particular report is available. So if you make a proper checklist of requirements related to the large borrower accounts, that will help you to compile this LFR in a more efficient manner. It is always better to take the information in advance from the branch about not only stock audits, reporting, due diligence, everything. You can have a single checklist, and that checklist you can send in advance to the bank and take the report from them and verify. If they say they have obtained the reports, you have to verify the reports. If they have not, they have said that they have not obtained, then you have to report. Then again, we go to the review, monitoring, and supervision para E of the advances portfolio. It talks about the inspection or verification of securities done by the bank. So the record will be available. That is the old requirement. So you have to see the physical verification report. We have to see whether what are the comments of the inspecting officer, any adverse comments, whether they have been complied with or not, etc. But there is one more additional requirement, the new clause which has been put, second pair of that, whether the substantial deterioration in value of security during the financial year as per the latest valuation report in comparison with earlier valuation report on record. Now, why this clause is there? We have to understand the logic behind it. You are all aware that I think has your session on prudential norms over or not yet over? NPA classification? Okay. I will give you the example why this clause is there. I will give you the background. For standard advances which are secured, there is one more clause which has been there in the as per the prudential norms, that if there is a deterioration in value of the security beyond 50%, let us suppose account is a standard account, it is servicing the interest, it is repaying the installments regularly. So by the operation of the account, it is a standard account. Everything is there. There are no overdues in the account. Everything is all right. But let us say that secured loan accounts, when it was sanctioned, the valuation of that particular security, the prime security against which the advance was given, was 10 crores. Now the subsequent valuation of that particular security comes to 4 crores. So there is a deterioration of 60% in the value of security. Though the account is standard, since the deterioration in the security is more than 50%, we have to classify that account as NPA in doubtful category. So account can become NPA. It will not become standard to substandard, substandard to doubtful. It can go from directly standard account to doubtful account just on account of deterioration in value of security. So such accounts will have to be reported here. And not only to be reported here, but also we have to make an MOC if the branch has not classified those accounts as NPA accounts. Those standard advances which are where there is a deterioration of more than 50% of the value, they will be treated as NPA from standard to doubtful, and by way of MOC, we'll make an MOC for that. Similarly, if the value of the security is rupees 10 crores, and then suppose it is now 1.5 crores. So now let's say it is 1 crore or say 0.90 lakhs. So less than 10%. The security value is deterioration is more than 90%. Then in that case, the standard account will be treated as straightaway loss. So account can also go from standard to loss account, though that account is standard based on the record of recovery. That you have to keep in mind. So security also is a issue which is important for the purpose of classification of advances as per the prudential norms. Only thing you have to remember that it is applicable only for secured advances and where the security value is more than 10%. So even those accounts which are secured accounts, but at the time of sanction itself, the security value is less than 10%, then this particular clause is not applicable. This is applicable only for those advances which are secured advances and the security value is more than 10%. So this clause is inserted just to have a cross check on this particular aspect of the advances as per prudential norms. So we have to report such accounts in this particular clause. Now, next clause is related to the in case of advances examined by you. Have you come across cases of deficiencies in the value of securities inspection thereof or any adverse features? Yeah, this is already there. Unauthorized overdrawing of beyond limits, insurance, etc. So all this related to the insurance expired, insurance is not there, like under insurance, the bank's clause not there, unauthorized overdrawings in the accounts not reported to the head office. You are aware that up to 10%, the branch manager has got the, suppose the limit of the borrower is 10 crores, then up to 1 crore, the manager is allowed to give the overdrawings to the borrower. That also has to report that he has given a 10% more or for a period of say 90 days. But if he has, if he is to, yes. Pardon?
Sir, I have one query.
Yeah.
You just told me that wherever the value of the security deteriorated,
Yes.
which should be more than 10% of the sanction limit. If the repayment is made and
Not
the
about sanction.
outstanding.
No, sanction. It is not related to the sanction limit. It is related to the value of the security.
Value of?
Security. So 10%, the limit sanction may be 5 crores, security may be 10 crores.
Correct.
So this is applicable to the not the security value, not the sanction amount or the outstanding, but it is related to the security value. So 10 crores you have to compare, not
As
5.
per the earlier valuation.
Yes, earlier,
Or-
last valuation. Suppose at the time of sanction, it was 10 crores. Latest valuation has been done, which is 4 crores. So there is a deterioration in the value of security by more than 50%. So that 5 crores is the advance. So 5 crores will become doubtful.
But what would happen that if the valuation is deteriorated, say up to 5 crores, but the outstanding amount is say which is less than the value of the security, then
We go by security and do the provisioning on outstandings. So we
that is what if the value
compare
of,
with value of the security limit, not the limit. For 10 crores, the limit is 5 crores, and security is 4 crores. Then it is doubtful. DA1 account. So we'll make the provision based on 30% or 20 plus security portion also. We'll take for that person. We'll take the 4 crores. Security value purpose
you
of
are saying that even though the outstanding amount is less than the security which is deteriorated, still
Yes.
a provision is required to be done.
Yes. You see the circular. There is a circular on that. You verify that. You will know that because it is based on the valuation of the security, not the outstanding balance of the sanction.
Okay, sir. Thank you.
You can ask me the question if because otherwise, how much time I have got more? I think I already spoken for 1 hour. I think 1 hour. So another half
Still
an hour.
there is still 1 hour is there,
Okay.
Hello, hello,
So,
sir.
including question hour.
So you can ask questions in between because those will be fresh. And
Because whenever the issue is there regarding that issue, if it is someone wants to raise the question, that is
and
most
even
possible for you also.
no issues. Even if there are some
Because-
questions at the end, we can take those also. But even if you want to ask any questions in between,
82
you can ask.
35.
No
Okay,
problem.
sir. Thank you.
No problem.
Hello, sir.
Yeah.
Hello. Hello,
Yes.
sir.
Yes.
As I have pointed that the valuation is required to done. There is any periodical period we require to valuation in case of term loan asset.
Now there is no specific guidance as per RBI for standard accounts, but for those accounts which are LPA and where the outstanding is more than rupees 5 crores, there is RBI circular that in case of working capital or cash credit accounts, the stop order has to be done within 1 year, and advances against involved properties, it has to be done within 3 years.
3 years. Okay.
But it is only applicable for LPA accounts
So, not for
and
standard.
outstanding is more than rupees 5 crores. That is RBI guideline. But if the bank has got internal policy of doing the valuation, say for large advances or for second, say maybe they may have the same guidelines. Like I think they will have a stock audit to be done once in a year, and 3 years is normal. Some of the banks are doing it in 2 years, 3 years. So I think it's the same criteria you can apply. But there is no fixed RBI circular on that. But definitely there will be a bank policy. So you can go by the bank's policy regarding the valuation. Because in case of standard accounts, we have to have specific bank circular on that. Because we cannot tell them that do the value. But the valuation report is available on the records and it is deterioration is known to us, then you have to report under this particular clause. Right?
Okay, sir.
Now there is one more clause which is added at 8 under review monitoring and supervision, red flag account. So if yes, whether any deviations were observed related to bank's policy related to red flag accounts, means those accounts which are potential NPA or stressed accounts. So what the branch is done is they mark such accounts. There are frequent overruns are there. There is sometimes DP is not sufficient. There are return of checks is there. So they will, or based on certain criteria, they will do the red flagging of those accounts. So you have to take the list from the bank or the branch or which are the red flag accounts which they are holding at them. Normally, CC accounts, overdrawn accounts, maybe some accounts where there is some stress available on the record. So you have to take the list from those accounts from the branch, and then you have to see there will be a policy of the bank to monitor such accounts very closely. So again, depending upon the bank circular, the accounts which have been identified by the branch, you will verify whether the compliance of the bank's policy has been done in case of such red flag accounts. So for that basis, what you have to do is, you have to obtain a management representation letter. In that letter, you have to get the list. So you add one para in that to get the list of red flag accounts which are there at the branch as of 31st March 2021, and also ask for the bank the circular regarding how these accounts are being monitored by the bank. So based on these two inputs, you will be able to give a report about such accounts in this particular class. Any query on that? This is very important because these are the accounts which are, in the opinion of the bank, are potential NPA accounts or the stressed accounts. The financial stress is evident. That's why they are monitoring those accounts closely so that they don't become NPA. Then again, there is one more clause, clause number 9, which is recently added. Comments on adverse features considered significant in top 5 standards. So again, this is one more clause which you have to add in your MR, getting the list of top standard large advances at the branch. Why? Because these accounts which are not NPA, standard accounts, and then you will be, since LFR is asking you to report on, so this should form part of your sample because you have to give a specific report on top standard large advances. So top 5 non-NPA accounts will have to be covered by your sample, and you will have to do the close scrutiny. And if you observe any adverse features in their review, monitoring, and other things, documentation also, then you have to give a special comments about such accounts in your report. So what you will give is, while reporting, you will give these are the 5 accounts in this particular branch which are top 5 standard accounts, and wherever you find there are observations where the management attention is required, in your opinion, you report. Otherwise, you can say that these accounts have been identified and there are no major irregularities in such accounts. So again, there is a responsibility of branch auditors so that it should not happen that any of top 5 standard accounts have, if any of the accounts, this top 5 accounts is having any financial stress, or if you observe that such accounts, though it is standard, it still needs close monitoring, then you should actually give your specific comments, adverse comments, or suggestions, I can say, for such accounts in your this particular paragraph. It should not happen that out of these 5 standard accounts, you are doing audit in April and May and June, they become NPA. In that case, it is possible, it is likely that your accountability may be like whether you have done proper scrutiny or not may arise. If such accounts are becoming NPA within next 2-3 months, and the stress were there when the audit was being conducted by you. So you have to be very careful while doing the scrutiny of the standard accounts, specifically the top 5 standard accounts of the branch which you are already. This financing activity is not there, so it's old. I don't know why they have continued, but they have continued. Spend time on that. Hardly you'll find any lease finance activities done by the bank, by the branch, which are already. Now, asset classification provisioning of advances and resolution stress assets. There was only one clause in that. Niranjan Doshi sir told you, but now there are many clauses which have been added depending upon the latest RBI circulars which are being given to the banks to prevent the slippages from standard to NPA. So what change has been there? Has the branch identified and classified the advances into standard, doubtful, and loss assets? Now, again, I have given one reference in circular. There is one circular which has come in current year 20, I think in the month of August or September 2020, which gives the direction to the banks that banks will have to do the classification of advances by way of through system directly. They will not do it manually. They will not do anything. They will not do it by any software, external software. If they are doing anything through external software, then what they have to do is they have to pull the data from the system, put to the software, and from software again pull back into the system. There should not be any manual intervention of any type when they are doing the classification of advances into standard, doubtful, loss. Only thing, they have been given time up to 30th 30th June 2021. So till 31st March 21, you may observe some banks which are doing the classification based on certain manual intervention. So that circular will give a detailed instruction to the bank how the classification should be done. There should not be any back-end processing. There should not be any, and if at all there are any changes made at the corporate CBS level, then there has to be audit trail available. What are the changes made? Who is the authority? Why the change was made? So each and every point of change, audit trail has to be available about the person who was authorized, the nature of change, and why it was being made. So that's this what the purpose of this particular circular is. Banks have to give the transparent position of all these advances. If it is NPA, there should not be no evergreening of the account. Nothing, no change can be made in the system to show it as standard. That is the RBI's outlook, and we have to see whether banks are actually doing it or not. So basically, we have to ask from the bank this year whether they have complied with the circular or not, whether they have fallen in line as of 31st March 21 or they are going to do it by 30th June. But now the 30th June 21 is the deadline by which all the banks will have to fall in line with this RBI circular. And that I will share the circular. You can go through the circular, which is very, very strict and stringent for the banks. Now we go to the next, is the identification and classification is in line with the norms prescribed by the RBI. Obviously, you have to see the system will itself take the change. Now, I'm just diverting the topic. What we are doing is we have made our own audit Excel tool. What we do is from the bank, we take the data in TXT format. The TXT format from Pinnacle banks, both like banks, it is used by SBI. Most of the other banks are using Pinnacle. It is possible to take the TXT reports, convert this TXT reports into Excel. We are using our Excel tool to do the classification. So then what we do, wherever we find the divergence between what we have processed and what the system shows, then we go deep into the details why there is a mismatch. So, but after the banks will have doing this generation from the system, this will be taken care of. Now, there is one more category, like there is one circular which has come in the month of June 2019. Now, which this is for controlling the slippages from standard to NPA to classify the accounts into 3 SMA. What is SMA? SMA is special mention accounts or special mention advances. So SMA 01 is up to 30 days. Up to 30 days is not overdue actually, but whenever there are RBI circulars given certain signs of financial stress, continuous overruns are there, DP is not sufficient, there are frequent return of checks, frequent return of bills, there are development of LCs, bank guarantees, invocation of bank guarantees. So they've given 8-10 signals which show incipient stress, financial stress. Though the operation of the account is standard, borrower is paying the interest, borrower is paying the principal, nothing is there on the record. But still there are signs of incipient signs of financial stress. Those accounts are reported in SMA 01. SMA 1 means overdues from 30 to 60 days. SMA 2 is overdues from 60 to 90 days. So on a monthly basis, banks are monitoring, reporting this SMA 01, SMA 012 accounts on a monthly basis to its controlling authority, to its head office. So we have to also verify whether that particular MIS generated by the bank is actual MIS generated from the system, whether the data is correct, whether the information is correct, and if at all auditor finds that any SMA2 account which is shown as 60 to 90 days is actually NPA, should be taken as NPA, then SMA2 will go to substandard. So such account will has to be reported by you in your MOC because you are making a standard account as a NPA account. From SMA 01 to SMA 2, there is no NPA concept, but account is moving from 30 to 60 days to 60 to 90 days. So you have to verify that statement very carefully. You can get a overdue statement from the Pinnacle or from the system, which will tell you the number of installments overdue. Ideal DP of that particular account will be taken and outstanding will be compared, and based on that, they will show you 1.5 months, 2.5 months. So 1.5 months means 30 to 60 days. 2.6, 2.7 means between 60 to 90 days. So whenever you find that it is more than 3 months, then actually that account should be shown as NPA. So you have to go through the overdue statement which you get from the system and see whether the classification of SMA 012 is correct or not, and whether any particular account which is shown in SMA should be actually treated as NPA. So all these things you have to verify. So SMA, I will recommend that you verify the report as of 31st March 21, which is generated by the system and reported by the branch to the controlling authority. So SMA report for as of 31st March 21 is a crucial report for us for the purpose of our verification and also reporting under this particular clause. So again, specific reporting is there in the LFR means we have to verify. All these processes were not there in the earlier LFR. Now RBI wants that all these things which are very important and have an important bearing from the point of view of RBI, from the point of view of the management, from the point of view of the single statutory auditors, for their comfort, for better reporting, for better transparency, these things have to be checked by the branch auditors, and that is the reason for which they brought all these things in the LFR for the purpose of specific verification and specific reporting. Then this is about the MOC. We have already discussed that whatever MOC you are passing, you have to also give the reference of that in this particular D clause, ID of this LFR. It was already there earlier also, and we were giving the reference to that also. Now E is added. It shows that list of accounts with outstanding of in excess of rupees 10 crores, which have been either downgraded or upgraded with regard to their classification as non-performing assets or standard assets. So apart from many returns, you have also certifying the return about the movement of NPAs. So those of us or those of you who will be auditing the large corporate, mid corporate, or industrial finance branches of the banks, where you may have the cases where the accounts which have been either they have been upgraded. So in that case, you have to verify whether there is a genuine upgradation from the sources, proper sources, genuine sources, and whether that particular account is eligible to be upgraded. If you find that particular account has been upgraded by way of any other solitary entry, then there is an RBI circular about the accounts having the inherent weakness. You have to go through that circular. If you find any of the criteria of that particular inherent weakness is applicable to that particular borrower where the recovery has come by way of a solitary entry at the year end in the month of March. So you have to be very, very careful for those accounts which have been upgraded by the bank or by the branch in the month of March, specifically in the last week of March or last, you can say, month of the March. There you have to verify whether it is out of genuine resources or not. And you have to specifically report it under this particular clause of the LFR. Similarly, downgraded, you have to verify. Downgraded is not an issue. Wherever the bank has downgraded, they must have done the correct thing. And but only thing you have to report of such accounts. So you will attach a list of those accounts where upgradation, downgradation has been done with outstanding of more than rupees 10 crores. Here, outstanding excess of rupees 10 crores, we take it as the fund-based advance. Because this particular, or I think there is, we refer the guidance note. It may also take non-fund based also, but we have to see about that. I'm not sure about that, but I think to be prudent, we may also include a non-fund based limits for this purpose of 10 crores. Whether RBI guidelines of income recognition and provisioning have been followed or not. So this is yes, you have to, apart from reporting in the LFR, we are also giving a certificate to the bank that we certify that the branch has followed the RBI guidance related to the income IRAC norms and all. So again, you have to report it here. In case of any revenues, you have to say that yes, except for the MOC passed for so and so, you have to give yes or no. Then there is a further new clause added about the accounts restructured or refreshed during the year, because there is a separate disclosure, there is a separate certificate, there is a separate disclosure which has to be given, certified by you. And if at all you find any accounts which have been restructured or refreshed during the year So this also, under this clause also, you might have to, I think COVID-19 related disclosure is separate, but this will be applicable only for those accounts which have been restructured, refaced. Here, your MSME accounts will be covered. COVID-19 related restructuring is not treated as regular restructuring, but there is a separate disclosure for those accounts, which is not actually linked, connected to this clause, but MSME accounts will be covered under that. But those accounts which are for 6th August circular, 6th August 2020, related to the structure, COVID-19 case will be covered here. RBI guidelines for restructuring of all loans, again, we have to give whether they have followed it or not. RBI guidelines, where banks will have to frame their circulars based on the RBI guidelines, and it can be stricter than the RBI circular, but it cannot be lenient. So that only you have to see. That I think that central auditor will see that, but we have to see whether the RBI guidelines have been followed or not. Whether the branch complies with the regulatory stance for resolution of stressed assets, including compliance with board approved policies. There are a lot of circular. There is one circular related to the June 19. Give the reference from the RBI, which talks about the resolution process of the stressed assets. There are a lot of circulars in force beyond that, CDR and other things, S4SN, etc. So all these circulars are dropped, and there was one circular which was issued for this for resolution of stressed assets, which is very detailed circular, which is June 19. With reference to that circular, if the branch has done any resolution or restructuring of any stressed asset, then we have to verify whether branch has complied with the regulatory stance of the RBI in respect of such accounts. Then upgradations and in NPA is in line with the norms of RBI. Obviously, that we have to verify. I've already discussed about the concept of inherent weakness and other things. You will have a separate session on that. I will not go deep into that. Whether auditor disagrees with the upgradation of accounts, if yes, give the details. Because now, if at all you feel any account has been upgraded from NPA to standard, then there will be a lot of resistance from the bank, from the branch. He will say, "No, account genuine sources aaya hai." Then the branch manager might refuse, because whenever you wish to pass any MOC, it has to be countersigned by the branch manager. So in case of disagreement, if at all branch manager is not ready to sign and you are not able to pass the MOC, then first thing which you have to do is to contact the regional office of the bank, regional manager. If he is not able to help you, or if he is falling in line with the branch manager, is also not agreeing, then you have also got recourse to contact the central auditor of the zone which you are auditing. And if at all still he doesn't sign, then if the MOC cannot be effected, then you can give that particular accounts which you disagree about the upgradation, you wish to be downgraded to NPA under this clause. If the amounts are material, you should also cover these accounts in your main audit. It's not enough that you cover such accounts in this LFR, means you have done your job. No. If the accounts are of large value, if you more than 10 crores, material NPA is not taken by not done by the branch, then in that case, you have to give a qualification, because in that case, the auditors, the central auditors who are doing the consultation at the zonal office or regional office at their level will take the cognizance of this particular disagreement, and they will take the appropriate action whether to do it or not. Next, there is this clause related to the legal action of recovery. Now this is continued, so we have to see whether wherever there is a legal action for recovery, there is an execution petition has been filed for recovery and back. So if at all we find that branch is delaying the recovery procedures, though the court's orders are there, then it's such consequence. Legal action are not being taken by the branch, not executed by the branch. So such cases have to be reported. That was the old clause, continued again. So whether there are any new account now, this is IBC. This comes insolvency bankruptcy code. So that this particular, if there are any accounts which are under this IBC thing, they have to see whether branch has taken appropriate actions related to such accounts, and whether such borrowers are there, whom the process of IBC is initiated by any of the creditors, including the bank. The bank also is a creditor, maybe a secured creditor, unsecured creditor, depending upon that. It can approach, take the action under IBC. Head office is allowed to do that. So such accounts, if those are there in the branch you are auditing, then you have to give your comments about such accounts under this particular clause. And again, you have to also see whether appropriate provisioning as per the RBI circulars has been made for such accounts which are there in IBC. So this is additional responsibility for you to report. Then this clause has been modified. Previously, DICGC claim was there. Now DICGC is out of question, so only ECGC in case of export packing credit. So wherever there is a problem with the export proceeds recovery, then bank have to lodge the claim with the Export Trade Guarantee Corporation. So we have to take a position from the bank, how many claims have been lodged and how many are rejected. And if at all there is a rejection of the claim, then if that particular account is a doubtful account, then you have to see whether the branch has not considered that claim as a security. Because if the claim is rejected, the amount money is not going to be restored from the ECGC, then that amount should be reduced from the security value of that particular borrower. So appropriately, in case of doubtful accounts, the provision will increase. We have to see whether that compliance. This is a new clause which has been added, which asks you to do the specific verification in case of those claims which have been rejected by ECGC. NPA or violation reports, we have discussed about that, 5 crores and above 3 years and 1 year. So I will not again repeat that. That was the old clause, which is continued again. And here also same thing. In case of those accounts, there are compromise settlement cases by the bank. We have to go by the recovery policy of the bank. Each bank has got a recovery policy which has been approved by the head office, and we have to, wherever such cases are related to write-off compromise settlements, we have to specifically see account by account whether the particular account which have been considered for a settlement, write-off, waiver or whatever, but the limit is only 50 lakhs. They have retained the limit of 50 lakhs. It was 50 lakhs earlier, still 50 lakhs. So those accounts, if you find which have been settled under compromise scheme of the bank on its own, whether all the necessary RBI circular, bank circular has been followed in total for such accounts. Specifically, you have to report that was the old clause, again continued in the new act. Now, these are all new clauses which talks about the decrease. Now, previously there was only clause reporting whether the bank has executed the decrease or not. Wherever the decrees have been obtained from the court, now we have to give the age-wise analysis of the decrees obtained and pending execution. This is because what RBI has observed that in case of many accounts which have been disputed, because once the account has become NPA and written off, it goes out of the balance sheet of the bank. So only it is there in a normal sort of out of the books, and many such cases RBI has observed that banks are not following up the decrees. They have got the court orders for recovery. They have to just appoint an advocate, appoint an agency, and get this decrees executed and report the money. So there are certain lapses on part of some banks in doing the recovery, although they are holding the decrees. So, and these are most of the such accounts are written off accounts. Those are not in the books of the bank, but LFR requires you to give the age-wise analysis of such accounts at your branch which you are auditing, where the decrees have been obtained but not executed. So this will give an overall idea to the management, to RBI, to central auditors, how many such accounts are there at a particular bank as a whole where the decrees are not executed. Similarly, it is whether the cases concluded, the recoveries have been properly appropriated. Again, appropriation in NPA accounts, you are aware that on account, when account is standard, the recoveries, the interest and charges are recovered on accrual basis. Once account becomes NPA, they are treated on a recovery basis. Only thing, how the recovery are being appropriated, whether principal first, interest first, charges. So normal recovery is first expenses, then interest and principal. That way the recoveries are appropriated. So we have to see what is the policy of the bank and whether these appropriate recoveries have been properly appropriated in NPA accounts as per the policy. System will do that, but we have to see whether the system is doing it correctly as per the approved policy of the bank. This is for the recoveries which have been made in case of NPA accounts. Now, one more aspect is covered under this. If at all you are doing any audit, suppose there are certain banks where they are having a retail factors they call it, because where all their housing loans, vehicles, all the retail financing, sanctioning, documentation is centralized, and only the limits or the accounts are held at different branches. So in that case, you are doing an audit in where the documents are held by their retail factories at the particular bank. Then you will not be able to. So how will you verify the documents? So in such cases, we have to call for the documents from that particular center and do the verification. So such cases have to be, in cases documents which are held at the CPCs, whether the auditor has received the relevant documents as asked by them on test check basis. So you may not verify all the documents, but out of say 500 accounts which have been sanctioned during the particular year, you may call for 100 documents, for example, on basis of your sample. And if at all you don't get any documents from the central CPC, then such cases you have to report in this particular case. So it takes care of about the such cases where the documents are held by CPCs. And this clause is a residual clause. Major deficiencies in credit review, monitoring, and supervision. So wherever any of the deficiency is not covered in above 11 clauses, you can cover under this clause number 12. So friends, this is all about, I think, about the advances. This is for LCs and BGs. Now this is the non-fund based facilities converted into fund-based facilities due to invocation of bank guarantees or due to development of cases. So it talks about only those cases which we were reporting earlier, which we continue to report in current format also. Only thing, there is one addition to the clause number 3, which says that wherever the interchangeability of the fund-based and non-fund-based limits was allowed subsequent to the revolvement of cases. Now we are aware that certain accounts which are sanctioned, fund-based and non-fund-based limit. Apart from that, there is an interchangeability allowed between the fund-based and non-fund-based. Suppose the CC limit is 5 crores, LC limit is 3 crores. So bank is allowed to convert that 3 crores into fund-based limits, but overall limit will be 5 crores. So such interchangeability of limits, if it is done after devolvement of LC, then it may be a case that bank has done that to avoid that particular account of becoming NPA. So specific reporting is asked by the bank for such cases where there is a fund-based limits have been converted to non-fund-based limits, not was based on the actual review, but it was allowed after the devolvement of cases. So such cases you have to be reported under this. So what you have to do is you have to take the list of how many LCs have been devolved during the year 2021, the list of the LCs. You have to take the list of the bank guarantees which have been invoked during the year 2021, and then see the sanctions of the borrowers which are covered in that review of the such borrowers, and then confirm whether there is interchangeability of limits has been allowed to that particular borrower after the devolvement of LC. So you have to do the exercise on your own. You have to do the verification on your own, because bank may not give you the entire information, which you have to do it yourself. So this is the additional responsibility which has been cast upon you by this particular clause number 3 under this non-fund-based facilities. Suspense account, everything is old. Only thing they have added 90 days, which was not there. Old outstanding interest was there. Now why 90 days is there? Because if any entry is there which is more than 90 days old and you are sure that this amount is not going to be recovered, then either you can tell the bank to write off the case, which is not possible to write off because you are doing audit after the year is over. Then you may tell the bank to, or you may make an MOC to the extent of money is not going to be recovered. So that excess of 90 days. So suppose there is any, say, let us suppose bank has deducted TDS of particular depositor wrongly in case of, and that particular depositor was not covered under that. he may refuse to like accept that. Then in that case, the TDS amount has been refunded to the borrower, then money will not be recoverable. Similarly, case of any staff advance or any advance given to either the staff or any outsider for which it is not possible to recover, then such old balances we have to verify whether those are there. Suspense account normally should not have any outstanding more than 3 months, and if you find anything more than 3 months, then you have to see whether it is recoverable or not. If it is not recoverable, then you can recommend a provision. Then unusual items test check was there earlier. Only thing added is, are there any intangible items under this head? Losses are provided. I have discussed that. So you have to recommend a provision. Though it is not advanced, the amount is lying in the suspense account. Now deposits, there is, you are aware that classification of dormant inoperative accounts on the system does that. Previously, it was endowment ledgers were maintained manually. So, does the bank have a system of identification of dormant inoperative accounts? So, system it will self after there are no operations in the account, saving bank account for a particular time. That system itself will treat the account as dormant account, and if you want to convert the dormant account to operating account, then the permission of the branch manager is required to operate. So, we have to verify whether that system is there. Where the system is, so that you can know only from the exceptional transaction report which is available to you. So any transaction which is surpassing the regular sanctions, is overruled by sanctioned by higher authority, such cases will be there in the ATR of the branch. We have to verify that particular internal control systems are there. So particularly for those accounts which have been dormant, classified as dormant, and from dormant to inoperative. That you have to verify and give your comment on that. After the balance sheet date, so this is again, this is for whether there is unusual large movements. So this is related to window dressing, which was already there. What you have to do is take a position of deposits as of 15th March, as at the end is available with you, and as on the date of audit. If you see any major unusual change, increase, decrease in the deposits from 15th March to 31st March, again from 31st March to the date of audit which are doing, as of say 8th April, 10th April, we find that deposits have been reduced drastically. You have to just see the angle of window dressing. I did not tell you how to do that because you are all professionals. You are able to identify whether it is window dressing or not, but that will be a thing which you have to verify when you report on this particular course. Again, automatic renewal of deposits, there is a specific reporting because automatic renewal of deposits is allowed for domestic deposits. For Forex, FCNRB deposits, there are different guidelines. There are FEMA compliances and etc. there. So those of you who will be doing accounts where there are FCNRB accounts, we have to see the FEMA guidelines, NRS status things, specific reporting is there because automatic renewal of FCNRB, because there is a lot of things which has to be complied with. To go through that particular circulars and do that because there is specific reporting about the renewals of this FCNRB accounts. Then you have to, this is about the minimum balance requirement, layer of charges. System normally will do that. If the minimum charges balance is not maintained, there will be some charges which will be debited to that particular account directly from the system. We have to just initially see whether we take a sample, verify the sample where this minimum balance charges have been recorded by the bank and whether the system is doing it properly. So that particular compliance you have to specifically report, which was not there in the earlier LFA. Bills payable, same thing, old outstanding entries you have to pending for more than 1 year. So there is no change in that. Even the period also is the same. So I will not go into that. And you have to report any unusual entries if those are passed under bills payable, similar deposits, etc. Then contingent liabilities, again, this is old list of major items of contingent liabilities other than constituents like LC and other things. Those will be there in the branch, but there may be certain liabilities which might not be there, which can be verified on the record. So we have to take a MR, management representation from the manager that there are no other contingent liabilities other than those reported in the balance sheet of the bank. There may be certain cases filed by the any depositor or customer complaint or anything that you may not know from the going through the balance sheet or of the trial balance GL of the GLPL of the bank. But for that, you have to take a representation from the manager that there are no contingent liability other than those reported in the accounts. If those are there, then they have to take a certificate that from the manager. There will be a separate return for that, which you have to countersign after verification. Again, this is about the test checking of the interest, discount, and other things, which is old. I think they have cut short the paragraph, but clauses continue. Same thing for IRAC norms. Has the branch complied with the IRAC norms? I think there's repetition. It was there in the advances. Again, it is repeated here. That is okay. The same, you can also report the same, which you have the matter which you have repeated in the earlier paragraph here. Repeated is an repetitive clause. Only thing, how will you verify? Has the test checking of interest, discount, commission fees revealed any excess short credit of material amount? So there you have to just refer to the latest income revenue audit report of the branch. So what are the areas where income leakage has been pointed out by the internal inspectors, the internal auditors, income leakage auditors? So you have to just take a review of those areas where there is or best, and you can have your test check about such like suppose we are doing an audit of a bank, industrial finance branch, corporate branch, where the bank is lead bank, and then you have to see the major lead bank charges, because the lead bank charges at the time of renewal, those fees may be 4 lakhs, 5 lakhs. So some major items of income leakage you can test check on your own, because the time at our disposal is not very high. So you can have a test check, or you can just have a overall look from the available maybe consumer auditors report, internal auditors report, and other things. And then I reports already discussed about that. Now P&L account has test check of the interest on deposits revealed any excess short debit of material amount. If so, give the details of the. So again, you will have to go do the system check about the interest on, because normally interest on deposits and other things will be paid at the central CBS level. So normally branch would not have any. Once the tenure of the deposit has been put in the system, the deposit rate should be picked up by the system. Only thing what you have to verify here is in case of special deposits, like special deposits are those deposits which are more than rupees 1 crore, where the rate is negotiated by the bank and the depositor. So those cases you may verify whether the interest calculation has been done correctly or not. And does the bank have a system of estimating and providing interest accrued on overdue maturity from deposits? Again, system will do that. We have to verify whether it is normally in case of overdue deposits which are not covered under automatic renewal. Normal banks they are giving the interest of the same bank rate to those such deposits, but you have to verify it, the bank circular, bank's norms, and whether it is being done or not. Now there is one clause which is added to the deceased depositor. So again, this was not there in the earlier LFR. You have to specifically see the bank's guidelines about the how the interest is being provided in case of deceased deposits. I'm not aware about that, but we have to verify whether it is being done or not. About the diversion trends, this is an old clause, so I will not spend much time on that. How you verify that? Income and expenditure. What you have to do is you have to compare last year's advances, current last year's interest. So what is the interest rate which has, what is the total interest which has been earned on total advances of the last year? Compare that with the current year. So you have a comparison with the, similarly you can do it for deposits, total deposits, average deposits. So we can have a statistical information from the last year and current year, average it or whatever you do it. So the main purpose is, if you observe any divergent trend, so if there is a material increase or material decrease in income or expenditure, then you have to inquire why such is there. There may be valid reasons. Sometimes there may be rate of interest might have been increased, or maybe overall rate of interest has decreased during the year. But there should be logical explanation for such divergence. If you find there are no logical explanation for such divergent trends, then in that case you have to report such cases in this particular clause. So you have to do a statistical analysis comparison of 2 years and accordingly give your report on this particular clause. Again, I was talking about this redundant clause about this is gold bullion. Like when this particular format was recommended, those days banks used to keep the gold coins bullion, like which was available for sale to the customers. So you can go to the any branch, buy a gold coin, and the accounting of that income is done at the head office. But the physical joint custody of those gold coins, how much uh, coin, how many coins the bank, the branch has received from the head office, how many are sold. So which is a custodian type of a job which branch is doing. So in that case, what we have to verify as branch auditor is how many gold coins are received from the head office, how many are sold, whether the sale process have been sent to the head office, and how many are in balance, whether branch is physically holding such gold uh, coins or bullions, whatever it is, physically, and then you have to give a physical certificate of such gold coins as of year end. So that is the thing which is being added subsequently. But I think some of the banks have already stopped the sale of gold bullion and other things. And then, but still, if you can say it's not applicable. But security items, yes, security items like issue of securities like checkbooks and other things, it has to get into that. This is about talks about gold bullion and other things, so this is not applicable. C, clause number C, which is related to your stationery, number stationery, checkbooks, term deposit receipts, drafts, pay orders, checkbooks, etc., travelers check, gift check. This is a number stationery. So normally the branches are keeping physical records in the register, as well as system is maintaining the record of. So whenever you go for audit, you have to give that job of verification of security items to your junior assistant. Tell him that he should take the report from the system. Tell him to take a physical risk if it is maintained by the branch, and actually physically verify the number stationery with the stationery record maintained by the system as well as maintained in the register. So this clause was there in earlier, some other clause, so it is reshuffled and brought here. So mainly, I think you will have to report on clause C for security items under general. 1 and 2 may be there if the business of gold coins purchase sale is there in that particular branch which you audit. Then previously books and records, all it was based, reporting was based on the manual registers, manual ledgers, subsidiary and other things. Now they have revamped that totally, and now it is based on the CBS, your CBS and other things. So whether there are any software systems used by the branch which are not integrated with the CBS, some normally it is restricted that suppose you are doing any audit of any authorized dealer branch, foreign exchange, then there may be certain software which is being used outside the CBS, but and then the data from that software is being transferred from by either by manual entries or through the system to CBS. So whatever there are any modules which are not integrated by the CBS, we have to report about such softwares in this particular clause. Then about the IS audit, if the branch is covered under the IS audit, then you have to see verify the report of that. Mainly it will be related to the user access controls, internal controls, about the data, master data input of the being done, how it is done, etc. So we have to verify about the compliance of the IS audit. If you observe any major increases under the internal systems of the information systems or related information, then based on the reports available at the branch, you have to give your comments in this particular clause. Exceptional reports is very, very important because exceptional reports, concurrent auditors have to verify on a regular basis. Only as a statutory branch auditor, we have to verify whether they are generating and whether these reports are being verified by the bank manager. Now, compliance of daily exceptional reports, whether this is being done by the, so again, you need not go through the entire year's thing, but what you can do is the branch you are auditing is being audited by the concurrent auditor, then you will have a glance at if there is any major issue in that, you can give your comment based on the concurrent auditor's report, based on the internal auditor's report. These are the issues because you have don't have the time to go through the exceptional reports for the full year. It is not expected also, but whenever you are giving your comments, you have to give a comment based on what you have given your report. under this particular clause. Manual intervention, we have discussed about this NPS specifically, manual intervention to system related data and proper authentication and audit trails. As circular, I also sharing with you. Finishing the comments of data integrity, including data entry, checking correctness, integrity of data, backend strategy. Again, this is covered by that particular circular, which is issued in the month of August, related to the only thing what we have to here ensure is whatever data or returns which as a part of MIS which branch is sharing with its particular authority is directly generated from the system. So there is no manipulation of data which is being submitted in the MIS. So data integrity means whatever data has been submitted to the controlling authority or head office from the branch is actually tallying or matching with the system data. That is the only thing which we have to confirm and then report here. Intervention accounts will be applicable only. I don't know why this clause is again kept. This is old clause because under CBS previously there was the branches were under LAN. So the responding and originating entry, responding entry, those will be reconciled afterwards intervention accounts. But now under CBS, it is on the spot generating and both get knocked off immediately. This may be related to the pre-migration era, or I don't know, but still that clause is continued. I will not deal upon that. But frauds, there is a new frauds detected, classified, and confirmation of reporting not done to RBI. Here, whatever frauds which have been identified or identified by the bank during the current year, whether those have been reported to RBI. Branch will not report it directly to the RBI, but there is a return which is submitted by the branch to its fraud reporting cell, and the consolidated information of that particular those frauds is given to the RBI. So what we have to, as a branch auditor, we have to see whether that has been reported in the return submitted by the branch to the controlling authority. Then there is a change in the clause number 2, whether any suspected or likely fraud cases are reported by branch to higher office during the year. So this is about the reporting. If yes, provide the details thereof related to the investigation. So new addition is you have to give the reporting clause was covered earlier also. Now in this particular clause, we have to see what is the status of investigation, whether that fraud money, the person who has committed the fraud, whether the money has been recovered from him, whether what is the process of recovery, whether that money has been given back to the person to whom that account has been. So we have to give the status of each fraud, which was not there, which we were not reporting earlier. Now we have to report about the status of investigation. Then, in case of fraud, based on your overall observation, please provide your comments on the potential risk areas which might lead to perpetuation of fraud. It may be also taken as perpetration of fraud. So whatever thing I have given, many examples. So here you have to verify the internal control systems of the branch. They are given the examples, falsification. There are by what ways the fraud can be committed. Falsification of accounts, false representation of the borrower, misappropriation of funds. So they have given all the list of such cases here, like forgery, fabrication of statements, invoices, latest list of statements. So they have given the list to you. So whether you have to verify whether any of such cases applicable to the branch and give your comments on this. So all this detailed information is there in the part of the question itself. And then we have to see whether any of such cases there or such a lack of internal controls are there in any of such areas which have been. There may be more. It says etc. So there will be a technical guide which will be available to you, which is being published by RBI. They will give you the list of more than 100 cases from which you can refer, by which can be reported. Now whether system EWS, Early Warning Framework, is working effectively. Again, Early Warning Network, there is a guidance which is coming from the institute to you. There is a technical guide which will define what are the early warning signals for the particular account which may be fraudulent. So that also you can refer to identify the accounts which are likely to be a fraud accounts but not reported as fraud. So for those accounts, we have to use these techniques at the branch. KYC and AML guidelines, you have to again refer to internal auditors report, because KYC norms, AML, anti-money laundering, know your customer, these are to be done by the internal auditors of the areas to be covered. Only thing what you have to do here is about the CTR. CTR is cash transaction report about certain limit. You have to see whether the cash CTR report has been submitted by the bank to the head office. CTR and STR. STR is a special transaction report. They have given the instances whenever there is a suspicion of that particular transaction of being suspicious. Within 7 days of that particular transaction, the branch has to report that transaction to the head office, being a STR. So whether bank has followed the instructions related to the AML, means anti-money laundering guidelines. So KYC AML, you have to see whether those guidelines have been followed or not, and for that you may refer the concurrent auditor as they are supposed to follow the implementation process, or the internal audit report will be latest one will be covered by you, and scrutiny of that will give an idea whether the compliance which is being done by the branch, whether it is adequate or not. MIS, I've already discussed about MIS, data integrity and MIS. So this is again new clause which has been added in the current year. The data integrity and the data submitted to the controlling authority, whether it is matching or not. Then there are various other reports which have been covered by you. So we have to see by previous branch auditors reports, previous years LFR, there are compliance, internal audit, snap audit, concurrent audit. So all these compliances. So concurrent report for the month of February or maybe March. March is difficult. The February report will be available. So whatever latest reports which have been available by you, you have to not only see the reports, but you have to see whether those have been complied with or not. And there is a completion certificate which is issued by the controlling authority. They will give a certificate that this particular branch has complied with this particular report in totality. So that certificate you can ask. Now there is a addition of about the credit audit report in this particular paragraph in LFR, which was not there in the earlier. Credit audit report means there are certain accounts at the branch. Again, this is the bank's own policy above certain limit, say 5 crore, 10 crores, 2 crores, depending on the size of the bank and policy of the bank, should be covered under credit audit maybe once in a year, twice, maybe twice in a year, or maybe once in 2 years, 3 years, depending upon the loan sanction to that particular borrower. Our duty is to see whether the bank's circular has been followed by the branch or not. How many audits, how many accounts are covered under credit audit, whether all credit audits for those accounts have been done or not. If the credit audit has been done, whether the report is received by the branch or not. If the report has been received by the credit auditor, whether the compliance of that shortcomings have been done or not. So all these things will have to be done by you whenever you are referring to the credit audit reports of the particular borrowers. Similarly, I have already discussed about the stock audit report. In the earlier class, this was covered under advances. The same thing you can report here. Again, this is a slight duplication for stock audit report because we are already reporting in a detailed manner under advances. So there is again RBI inspection report wherever those branches where there is a government business is there. Normally such branches, and wherever there are foreign exchange transactions, such branches are covered by RBI on random basis. It's not once in a year. So again, we have to see their compliance. Income expenditure, IS audit we already covered. We have to verify the compliance. Investigation report is available in case of some accounts which are NPA accounts, fraudulent account, forensic audit, special audit, inspection. So all those reports, wherever any available at the branch, what you have to do is whether those reports have been complied with and the actions have been taken as per the report by the branch owner. And then there is a residual clause. Are there any other matters which you would like to bring to the auditors of central auditors or the management which are not covered? So there are certain clauses which have been left out by government transactions, FEMA guidelines, or other your tax compliances, GSTR, TDS compliances, etc. So what those areas which are not covered by this LFAR, if the branch auditor, if you think, you can report. So wherever there is a non-compliance which is not covered in particular clause, but you want to report, you can cover all such cases under this. So friends, it's already almost 5:25. So I think already almost 2 hours I have been speaking on the subject. So if at all you have got any specific queries related to the LFAR new format amendments, you are welcome to ask me. Thank you very much for your patient hearing. Thank you very much. And thanks for the opportunity given to me for sharing my thoughts with you. So I would like to welcome any queries on this particular subject.
Thank you, sir.
Yeah, that was nice. Thank you.
Three queries. There is one clause in LFAR stating whether the information about the ECC claims made by the branches and rejections thereof, whether these details are available at branch or it is claim is made from head office.
No, since the accounts, this is applicable to export packing credit accounts, EPC accounts, right? So export is made, money has not come. So the normally what you have said that normally the claims will be lodged by the regional office. The information related to such claims will be sent by the branch of the office. So you have to get branch will have to get the information from the regional office about the status of such claims. Our duty as branch auditors is to verify whether these claims have been lodged, and if in case of rejected claims only, we have to see that it is not considered for the purpose of violation. That is our duty.
But this information is required to be available at branch for reporting purpose.
Yes, we have to take the information from the regional office if they are handling the claims. Because normally, like you rightly pointed out, these claims would be handled centrally at the head office level.
Yes. Okay. Then secondly, there is one clause.
Anil, just 1 minute, I'll interfere. We have with us Chairman of WRC, Manish Bhai Gadia ji. He has just joined the session. I welcome you, sir. On behalf of all the branches, Kolhapur, Sangli and Ichalkaranji branches. Rajesh, can you kindly unmute him? Renu? Hello, Renu.
Rajesh.
Tushar, I have unmuted.
Okay.
I have unmuted everybody.
Yes. Okay. Renu?
Gadia sir, are you able to hear us?
Yes.
Okay. I once again welcome you, sir. It is nice to have you on this session. We were eagerly waiting for you, and we are thankful that you have taken out your valuable time and come here to address all of us. It is really our pleasure. Renu, are you there? Renu, you are not audible, Renu.
Renu, kindly raise voice from your side. Yes. Now you are audible.
Now she is audible.
Yeah. Please.
Okay.
Yeah. Please take over.
Sure. So, good evening, everyone. Now, we are honored to have Mr. Manish Gadia, CM Manish Gadia, sir, who is Chairman of WRC Regional Council. Over to you, sir. Welcome. And please guide us with your words of wisdom.
Thank you, Renu. And first of all, I thank all three branches. I will say this is a Triveni Sangam, that all these three branches are doing a webinar together. That is Kolhapur, Sangli and Ichalkaranji. So Tushar, Chairman of Kolhapur branch, Mahesh, Sangli branch, and Nitin Ladda from Ichalkaranji branch. Thank you for inviting me here. And very good session by CA Prashant Tidke. I listened a little bit in the end, but very good. You have covered that very well. And apart from that, I also requested Tushar and all the chairmen that in this year, maybe somewhere in June, July or August, whenever everything becomes normal, so all the 4 branches of this region can come together and have a one mega program in a physical mode. So the trend of having a joint program will continue. बराबर है
Yes,
तुषार भाई?
definitely.
Yes, sir. Yes, sir. Definitely,
Yes,
sir.
bilkul. This is the start of it.
Yes, this is just the beginning, not the conclusion. And I always, as far as Kolhapur is concerned, I always believe that it is my hometown. The way Kolhapur and HL Karanji and other Sangli has given me a love throughout my journey in regional council. And before that, also as a speaker, when I used to come there as a speaker on service tax or GST. So the love and affection what the branch has given me is really wonderful. So as far as bank branch audit is concerned, many branches has allotted audit to the bank branch auditors, or few branches, couple of branches are going to allot maybe on Monday or Tuesday. So then it is the time for us to do the bank audit. India is estimated to have one of the largest banking system in the world as far as the extensive branch network is concerned. The role of the banking sector in the overall growth and development of Indian economy is also quite significant. The banking industry is no doubt backbone of the economy. Thus, it is vital to ensure that banking industry remain healthy and robust. The accountancy profession, within its given meaning and scope of work, contributes actively by ensuring proper financial reporting and disclosure aspect of the banking industry. In view of the stringent disclosure practices and far-reaching technology development, the role of accounting profession with respect to banking industry has assumed considerable significance. The massive account of public money being handled by the bank as well as inherent vulnerable nature of the banking industry, however, make it imperative that the activity of the banking industry to be closely monitored and regulated. Audit form an integral part, an important part of such monitoring and regulation. To able to contribute to the health of the banking industry, it is essential that the statutory auditor are well equipped in terms of knowledge of the banking industry and audit of that. And I am very happy that these three branches came together and holding and guiding their member about the bank branch audit. So what is important is that all a professional, all chartered accountant, we should give a quality deliverables, quality service to the bank, to the stakeholder, to the client. And that's what we have to maintain. So the reason of holding this program is to improve the quality and to cover the latest amendment, including the changes in LFAR. So of course, this seminar is going to benefit, and this good service branches are going to continue. WRC has also come out with a publication on bank branch audit, which is, if you want, is available in a physical form also. At rupees 125, you can approach any of your branch, and from there you can get it. Within 1 or 2 days, we will also make it available on a virtual platform or in a soft copy. So on a subscription model at a very minimum price. So whatever way you want to take the benefit of this book, you can take it. So thank you very much for inviting me here and giving me this opportunity to interact with you. Thank you. Over to you, Tushar.
Yeah. Thank you very much, sir, for your valuable words. Thank you very much for joining us. Yeah. Rajesh?
Yes, Tushar.
Yeah, let us continue with the question answers.
Yes.
Yes. Anil, you had some questions.
Am I audible now?
Yes, sir.
Yeah.
You are audible.
Yes, sir. Yes. Anil?
I guess he has left the meeting. Maybe some
No issues.
network issue.
Network issue may be there.
Sir, till then, if you permit me, there were certain questions asked in chat box.
Yes.
Yeah.
So there was one table that you were showing me, showing to all of us. In that there is something what like y, x and y.
Can I share it?
Yes. So in that one of the member has asked that where from we will get y amount, whether this is sanction amount or utilized amount.
Y amount is the utilized amount.
Okay.
Y amount is here to what you have to get from the branches. There will be a total LC outstanding figure and total BG outstanding figure. So total LC outstanding figure, which is there in the general ledger, you will get a borrower-wise breakup of the LCs outstanding. Similarly, you will get the borrowers figures of the performance guarantees as well as financial guarantees from the borrowers. So you have to plot those figures with the fund-based limits, particular borrower. Now we have to go by a concept of account, for borrower, not account. So there you have to plot the figures and you get the Y amount. Only thing you have to match the Y amount with the balance sheet of the bank.
Okay. So in same thing we had something like we have to make provision of security, 10% of security. Could you just like there is a question what does this 10% of security mean?
Yeah, there is one question regarding the deterioration in value of security. So there I said that this particular clause is applicable only for those accounts which are secured accounts. So what is meant by secured accounts? There is a definition given by RBI. RBI says that those accounts where the security level is more than 10% would be treated as secured accounts. That means if the security level is less than 10%, those accounts will be still treated as unsecured.
Unsecured.
Yeah.
Sir, one more question. In clause 9, top 5 standard accounts that is given. So
Yes.
which accounts are considered, whether only cash credit or term loans or mix of that?
Here if you go by not the account, here we go by borrower.
Okay.
Customer ID. So for that particular borrower, you have to see in totality. A borrower may have a cash credit account, he may have a term loan account, he may have a discounted account. So only thing I am not sure whether we should consider only the fund-based outstanding or include non-fund based. So that I am not sure about. But as a prudent policy, what I suggest is you also consider the non-fund based limits which have been availed by the borrower as a clear. So those 5 accounts we should consider for the purpose of our report.
One more question.
Yeah.
In case of reporting of potential fraud area, does comments are to be given in generalized manner or account-wise manner?
So we have to give an account-wise manner, and
Okay.
each account we have to identify which type of signal you observe that which you feel that this is a potential fraud.
Okay,
So
but then
account-wise specific comments giving the instances.
whether we have to classify them as NPA or not?
No, that classification, if it is a fraud, established as a fraud, then of course yes, it is treated as a NPA account. But in case you feel that it is a potential fraud, then in that case, you may not treat it as an NPA account. But if you are sure that it is a fraud, then you may take it as NPA. Only thing, potential fraud, you should be sure about that. That is important. As a branch auditor, if you are sure that this is a fraud account, then you have to classify that account as NPA.
Thank you, sir. Sir, now I will request Anil Chikodi sir to continue with his question.
Thank you, Rajesh.
Yeah.
There were 2 clauses wherein you are asked that details of decrease obtained.
Yes.
And whether executed or not.
Correct.
And also regarding that the contingent liabilities recorded in
Correct.
I
Correct.
just wanted to confirm whether these decrease obtained and contingent liabilities, whether these details are available in system or it is
No.
These
off
details the record we have to obtain.
Not available in the system. This is a contingent liabilities for LCs and BGs are there in the system, but not others. So what in case of decrease obtained and not executed, what you have to do is you have to obtain the list of cases from the bank's advocates. Latest status about the, because even the bank manager may not be aware about the what is the position of the
Correct.
decrease. So there, in that case, what you have to do is you have to take the reports from the advocates.
Even
who are
in case of contingent liabilities, that
Yes. Yes, for those also, those if there are certain liabilities which are disputed in the court of law, again you have to resort to the advocate's opinion report for such accounts. So all, I think in your MR itself you should ask for this information in advance. So this time our job has increased a lot. So for that, what I recommend is you should, before going to the branch, study this LFR, and whatever additional information which we need to take from the branch, take it in advance, because time at our disposal is very less.
Very less.
If we haven't got the ready-made information with us before we leave the branch, it will help us in doing the audit efficiently and fast. And whatever I am presented here is the raw data from the LFR. I have not changed anything. So everything, this is the LFR format. So I have not made any my comments here. Only old, new, whatever I have put afterwards, that is only my addition. Rest is all actual raw clauses which are there in the revised.
Sir, I guess Anil sir has left the meeting. So is there any other question?
Yeah.
Anil sir has left the meeting, unfortunately. He
So
might.
I think there was some connectivity issue. His voice was also breaking.
Okay.
But if anybody else has questions, may please raise the hand.
If anybody has got the questions, they can mail you. You can mail me here. I will reply. Just like
Yes.
Niranjan Joshi said, I will do that. No issue.
Yes. Renu,
Yes.
I think then there are no more questions. Two more hands. Yeah. Pooja.
Anil sir has joined.
Yes.
Ah.
I have another question.
Okay.
Yes. Yeah.
What precautions are required to be taken wherever such fraud like Nirav Modi in case of non-fund based issues while
Now,
auditing?
after that Nirav Modi issue, a lot of things have been done by Reserve Bank of India and the banks. Nirav Modi issue was just due to the PNB did not have SWIFT messages linked with CBS. After that, RBI has told the banks to do that. All the transactions which have been effected by way of SWIFT messages, now everything has to be routed through
the
CBS.
CBS.
And there are many such actions which have been taken by RBI now, where again this type of fraud will not be again committed.
Okay.
So what you have to just see is because basically concurrent auditors report, internal auditors report, that you have to verify, and their comments, because those will give you an idea about the weaknesses in internal controls of that, because they are the auditors who do the audit in depth, and concurrent auditors are doing the audit on ongoing basis. So their feedback is important for us. So
what should be the size of the audit team?
It will
of course, that will depend on the
branch.
advances and
It will
small
depend
and
upon
large.
not only the advances, because there may be a branch may be having 1,000 crore advance, but only 25-30 accounts. So it will depend upon the number of accounts, the extent of coverage, and the profile of the branch. We cannot decide it on just one or two cases.
Correct.
Yeah. It will basically depend upon the number of accounts and sample size which will be covering, because more the sample, more the people are going to.
Correct. Is there any change in the main auditor's report for this year?
No. Change on, you have to report as per your accounting standard. Mostly the banks are giving their own format. Only thing what you have to compare is you have to compare it with the SA701 format available, which is issued by RBI. So if you find any deviation in the format, because last one of the years I did not name the bank, there was a deviation in the reporting format as per the standards of auditing and what bank had given. So we pointed out it to them, and we didn't submit the report to the system, but we issued a separate report. I will not name the bank, but here you are not guided by the format given by the bank. Here you are guided by the standards of auditing.
Most
And
of
the
the
branch
time,
is required to report this CAM, key audit
And
matter.
it is not compulsory for you to report the CAM, but if you feel that any matter which you feel needs the consideration by the management or the central auditors, definitely you have got a right and prerogative as a branch auditor to give that matter under that section. The management and the auditors will, like Niranjan Joshi sir had said, everything has been read. Each line is read by the auditors of your
Yeah,
report.
correct.
So full importance and cognizance is given. So whatever you report, whenever you, only thing what you have to keep in mind is whether you give a qualified opinion, modified report, or whether you give any impression of matter. You have to explain the point very thoroughly so that we are able to, like, the management is able to apply their proper mind to that.
Correct.
most of the times,
Yeah.
the statutory audit report is in the bank standardized
That's why,
format.
yes, yes.
And in many
It doesn't
banks
allow.
nowadays,
Yes,
everything is online. Like in State Bank, everything is digitalized. All reports are to be submitted online. The branch
understand.
has no authority to modify anything.
I got your point, because most of the banks, which even I also faced the same thing. Then in that case, what you have to do is you have got your email ID of your zonal central statutory auditor with you,
Yes, yes.
and you will have also give the mark your whatever comments are there and say that, because the standard format reporting online format doesn't allow you to give your comments. But these are the following matters, whether it is related to modified opinion or whether it is emphasis of matter are there which we wish to report. So you can give a separate report, mail it to the central statutory auditor and the management. Definitely that will be taken cognizance of at this point.
Whether any increase in fees in this year, 2021?
We had actually Srinivas Joshi sir had a meeting in the last 2 days before in Pune. They have, our institute has represented, PDC has represented to RBI, and to that this fees are not been increased since many years now. Last was I think 10 years.
Correct. Yes.
So I think
That is why I
it is
asked.
likely that up to 100%, this maybe if not double, at least 50% hike is
Increase should be there.
expected.
Yes.
We should expect that, and I think
Yes.
institute. Only thing, there is a resistance for the banks. They say that there is a financial stress with them due to COVID-19 and other things. So there is a resistance from the banks at present. So due to that, it is not yet finalized. But we hope we get something. Let's hope.
Yes.
And the branches have started the allotment of branches?
A few banks have
Some banks.
given the letter of, they have asked for the letter of consent. I don't think any of the banks has yet, I am not aware about, at least.
Yeah, because there is no news on the groups whether someone has received their
Because
allotment or not.
now the issue of COVID-19 scenario, especially in Maharashtra, is becoming serious. So maybe some banks are thinking of doing either the physical audit or virtual audit, or I don't know. So that's why they might have kept that on hold. I'm not aware about other banks, but some of the banks I'm aware about have only issued the
Letter of
consent
intent.
letters, and they have taken the consent from the auditors. The continuing auditors will continue, only for the fresh auditors there may be an issue.
Even we can add in the main auditor's report as per the guidance of the institute about the COVID-19 report.
Yes. Whatever you, if there is no provision in the software or in your report submission, you can definitely give the report. Then in that case, what I recommend to you is you don't issue the report from the system, because if you issue a clean report through the system, and if you issue another report in the email or a separate communication, then it will be problematic. So what I recommend to you is you don't issue a report through the system. If you want to give any other comments which are not there in the standard format, then you should hold that report and give it.
Yes. Okay. Thank you very much, sir.
Welcome.
Renu?
All the queries from chat box are over?
Yes.
Okay.
So thank you very much, Kolhapur branch, for your kind invite. And 2 years back, I had come personally, physically. I was there.
Yes.
Yes.
Years back we heard you.
So this year also,
Last year due to COVID, we have decided to arrange, but from 22nd.
Myself and Niranjan Joshi
No
sir
problem
were
for that.
together to Kolhapur.
Yeah, both
Yes,
of you
yes,
were there. Yes.
Yes, correct.
We are
Thank you,
honored to
thank
have
you.
you, sir. Your
Thank you very much.
your session was
I tried my best to share my experience with you. I just about the experience, whatever possible best I could do. I tried my best. Thank you very much for your patient hearing.
Thank you, sir.
I am sure it helped us a lot.
Thank you.
Now I invite the chairman of Sangli branch to propose the vote of thanks.
Thank you, Renu. Am I audible?
Yeah.
Yes, sir.
Okay. It's been a great pleasure to have Chairman WRC, CM Manish Gadia sir, Vice Chairman WRC Drushti Desai ma'am, who is also our branch nominee, and past Secretary Murtaja Bhai for today's seminar on this branch audit. As rightly said by my colleague Tusharji, that we all were eager to meet physically for this seminar. However, due to restrictions imposed by the government, we have to shift to virtual mode. But there is one good thing regarding virtual mode, that these busy people are available easily. Otherwise, making arrangements as per everybody's time schedule is always a tough task. Anyways, at the outset, on behalf of all the three branches, I'm thankful to WRC Chairman Sri Manish Gadia Sarji, Vice Chairman Drushti Desai ma'am, past Secretary and WRC member Murtaja Kachwala for sparing time from their busy schedule. I am also thankful to today's eminent speakers, CA Niranjan Joshi and CA Prashant Tidke sir, for their valuable guidance. I am very much sure that members will be benefited from the tips given by the CA Niranjan Joshi sir regarding planning, documentation, and compliances. Similarly, amendments in LFAR is also very much important subject. I feel CA Prashant Tidke sir has really justified with the subject. In the morning session, Murtaza Bhai said that Niranjan Joshi sir is a batsman who could play at any position. Similarly, Tidke sir is marathonist who has really explained the LFAR amendments clause by clause. We are very thankful to you, sir.
Thank you.
I am also thankful to CA Renu Davda for beautifully handling the MOC work, and also thankful to managing committee members of Kolhapur and Ichalkarji branch for their valuable supports. And finally, I am thankful to all the participants who have participated in such a large number. Thank you. Thank you very much.
Yeah.
Thank you.
Thank you. Thank you, sir. Thank you.
This we come to the end of today's session. Tomorrow morning we will meet same time 10:30 a.m. So anybody, if you have any questions, you can mail to the Kolhapur chapter. We will be in contact with the speakers and try to answer you at the earliest. So thank you, everyone.
Thank you.
Thank you, ma'am.
Yeah. Rajesh?
Yes, I'm ending the meeting.
You can conclude.